On our right-hand side, we're looking at a chart here with the negative, or by the way, I do give assigned values of candle patterns, and it helps me to uncover the strength or weakness of a trend. In this example over here on our left, we look at the market close above the open. I give that a positive assigned candle because the market would be green. It's a positive assigned. It doesn't mean the market closed higher than the prior time period. It just means that it's a market closing above the open, which is a positive assigned candle. The chart on our right, I would assign a negative assignment because the market closes below the open. Now this is a black candle, and in color charts you could obviously change it to red, and you'll see that. In a downtrending market, you'll see lots of red candles, signifying that the market closes below the open. And that's a very good hint or sign that there's a strong trend intact when you see lots of red candles and it's in a serious downtrend. What we're looking for is clues as to when these trend conditions change. And so identifying the real bodies and those color changes and those positive or negative assigned values can help us astutely uncover when the market is going through a changing process from bearish to bullish to consolidating to trend. That's the condition we look for. Are the real bodies large? Are the real bodies small? Are the real bodies closing closer to the high or closer to the low? Is the market closing above the open or closing below the open? By candles, I can get that information almost instantaneous only by the visual aid of the colors and the shape and sizes. And that's the benefit for candle patterns. Again, we just talked about this, the relationship, which is very important between the open and the close, and we call that the real body. We can immediately understand what the real body's color is. And if we're bullish, we want to see what? More green candles or more hollow candles than we do red candles or dark candles, right? We want to see more market time periods closing above the open. We want to see and notice what the shadows are and the correlations of the shadows to the candle's real body. We want to see what the size of the shadows are. And again, as we talked about, the range or the length of the overall candle. So candles and candlestick patterns help give us immediate identification of the market's current environment and the market participants' acceptance or rejection at or near a support or resistance level. And it does so in a clear, visual manner. Now, one of my favorite candles is the doji. And that happens to be this candle right here. In fact, if you notice that our first down candle, and dojis, by the way, and the reason we have this particular chart up is that dojis sometimes incorporate 2 and 3 candle patterns. This pattern right here that we see is what's known as a morning doji star pattern. The problem is these don't traditionally show up as often. In fact, there's about 12 different variations. And by the time you look for that particular pattern, there's been too many trading opportunities that have passed you by. So I focus on just the doji. Now it's very clear because the doji settles between, and I give it in a large ranged time session. Let's say you had a 40-point move. If it closes within 8% of the open, so that would be 3 pips in a Forex move on a 40-point range. If the doji forms by closing close or at the open, that's signifying that there's a significant change in the market, and I give that a neutral assignment. So our first candle here, we have a negative assigned candle because the market closes below the open. Then we have a neutral. If the market's truly bearish, it should just be showing us negative candles, not going from negative to neutral to all of a sudden positive. So there's a change, a conditional change in the market occurring. The market closes above the open, and that shows, it signifies that there is a conditional change going on. Number 2, what we have with this pattern, if we focus on just the doji, is that the market closes here above the doji's high. That's very important. But as far as, and we'll get into that too in this course, but as far as this is concerned, the doji needs to close at or near the open. And like I just stated, within 8% of the overall range, if it closes back within near or at the open range, I consider that a doji. Some people would call it if the market doesn't close exactly at the open, especially in a smaller normal ranged session. Let's say in a given 15-minute time period, the average range is maybe 10 pips for a British pound or 12 pips in a British pound in a given 15-minute time period. If you think about it, 8% is really within 1 or 2 ticks. Some people would consider that a spinning top pattern, and we'll get into that.